What's going on, guys? Welcome back to another episode. It's been a while. It's been a while. A lot has been happening in the markets. The market hasn't been really so good to me recently. And as you remember, I was documenting my prop firm challenge journey. It is so unfortunate that I ended up blowing that account. However, I don't feel so much pain or disappointment because it was still a learning process. So if I have to show you, as you can see, the account is gone. Maximum drawdown hit more than 10%. That is $1,000. This was a $10,000 account. So if I was to show you the trades that I took that really blew the remaining balance, one of them was this GBP USD trade. As you can see, if I have to show you the 4-hour time frame, this is how it was looking like. It had swept this external range liquidity, and I was anticipating for a pullback to at least 50% level. And when the market got here, I was looking for a continuation to the downside up to this level, but target at least 3R. The market executed, played around, and then boom, stopped me out. That's one entry. There was a similar entry on Euro USD, which had a similar structure, and here it is. Market broke here down. Same price action. I was looking for a pullback to the 50%, but target 3R, which never got hit, and then I ended up losing. So these two trades ended up blowing my account. Then another mistake I did on gold the previous day was this trade here. This trade, I would have probably closed this trade at this point here, but what happened is the market executed my order and then came down, wicked to the downside. Then I emotionally trailed my stop loss above this point, and the market retraced back and took me out with the spreads, and then rallied to the downside. And that was quite disappointing. But I just know it's my problem because I trailed my stop loss early, and that is not the way to go. So that account, I've been trading that Proform account for the longest time, for a very long time, almost 1.5 years. And it has been through ups and downs. But the good thing is that I have an explanation for that. At least I know the problem, the mistakes that I have been doing in that account, and some of the mistakes I can show you right now. Some of the mistakes that I have done throughout that period. So number one is switching strategies. I have almost switched to I've almost traded all strategies that are out there. I started off with SMC, trading supply and demand, back in the days, and then after a few months I switched to something called Blackwatch Advisor or something, and then after that I started switching models around that advisory stuff. Then from that I went through a losing streak, and then decided to start studying ICT and stuff. Then studied ICT last year 2025 and started trading it, hit a few losses, and then tweaked my models around the ICT stuff, started entering trades using the 5 minutes time frame and stuff, and then from there I started executing the 1 minute time frame, to increase my risk reward, which was crazy. And then I never became successful. From there, I've now started executing the 30 minutes time frame. I just hope I'm not going to strategy hop again. That has been my biggest problem. However, it's not that big of a problem, because now at least I've been switching these strategies because of data. You collect data and you're really disappointed with whatever you are getting. You decide to switch it because now you can't keep on stressing on what you can't see results even when you are testing. So it has been really, my switching has been data proven, so not something that I've wanted to do. Circumstances have been forcing me to switch, and that is what I've decided. So right now I'm executing my trades on that minutes time frame. However, I've not changed my strategy this time round. I've just changed the time frame for execution, but analysis is the same. Only the time frame of execution that has changed. So I wouldn't say I have changed a strategy. Rather, I'll say I've tweaked my model a little bit just for a better performance, because that is all that matters. And then emotional trading, this was very bad, because I will be in a trade and I will have my rules, and I will tell myself I'm not supposed to move my stop loss, but then I will just move my stop loss. I'll just find myself moving my stop loss, trying to justify that let me move my stop loss to lock in some profit, or to prevent this market from coming to my entry point. Then it ends up coming, stops me out, then goes to my direction. Then I get pissed off. Then after that, I start chasing the market. When you chase the market, you know what happens. You get stopped out. And that is how I used to find myself in drawdowns. I would lose and lose and lose, and then I will get so frustrated. Then the next day come back, still not mentally stable, execute trades out of nowhere and lose, and that was not so healthy. So that is a mistake. I also suffered a lot, and it also brought a lot of problems like fear of execution and stuff. Another problem was the 1 minute time frame execution. Knowing that trading on the 1 minute time frame can be very profitable, but at least it's good to understand yourself, and it's good to understand your personality. There are very many people who are profitable trading 1 minute time frame, and it's because they are good at following their rules. It's good because they are good at managing themselves and psychology, and they are able to handle those very fast price movements. For a very long time I've been trading the 1 minute time frame, but now that I have switched to the 30 minutes time frame executions, I've realized it's more peaceful and more even fun, to be honest, executing the 30 minutes time frame. 1 minute time frame is very fast, and another problem is that it plays with your emotions a lot. One time you are happy and the market is going to your direction, you have broken even, and the market starts retracing, and then you start having these feelings, your traders, feelings of you are feeling bad, and you want the market to just run to your direction, and then it stops you out, forms another setup, stops you out again, and then runs to your direction even without retracing to your entry again, and then you get pissed off. So I decided, instead of just going to drawdowns, executing on the 1 minute time frame and then getting stopped out very many times, why not just execute on the higher time frame and just aim for a 3R, which is simple, because what matters is a continuous rising equity curve. It's not the time frame, it's not you are so much classic executions and sniper entry sheet. It's just, what matters is good equity growth at the end of the day, whether you make money or not. What matters is just making money in the long run, and that is what I decided. Getting married to a setup getting married to a certain time frame is very, very bad, because you are going to stick to that forever, and you are not going to try to experiment other time frames. Maybe the time frame that you are trading on is not meant for you. It does not match your personality. Why not test other time frames? So that is what I decided, and I'm liking it, trading on the 30 minutes time frame. I've never traded it, and yeah, so that is it. Keep on supporting me, subscribe, wait for another episode. Peace.